Hello, hello. Welcome to the presentation for the Daily FX trading audience. You've made it to the presentation. I think there's a few chairs in the back. Go ahead, grab one, make yourself comfortable. There's some donuts and coffee. Enjoy. Topic of the presentation today is how to improve the timing of your trades. In previous presentations, we talked about how to use moving averages, we've talked about how to use oscillators, we've talked about how to use Fibonacci retracements to get into a trade. Now let's talk about Fibonacci extensions. Yeah, Fibonacci extensions on how to prove the timing of trades. And quite frankly, what we're talking about now is not how to enter a trade, but how to exit a trade, which is just as important. Now for the this presentation is going to be part PowerPoint presentation, as you can see, but it's also going to be part live data. And for that live data, I will be using the FXCM MT4 trading platform. Let me remind you that the purpose of this presentation is education. There are no trade signals or recommendations in the presentation. However, it will teach you how to use technical analysis to plan your trades in advance. Now, it's common sense that trading and investing is risky, but Forex is unique because you are leveraged 100 to 1 or even quite a bit more. As an amateur trader, once in a while you may get lucky and that leverage will work for you, but more often than not, that leverage will work against you. Do not trade real money until you have a track record of success using a demo account. Do not trade real money until you have a track record of success using a demo account. Capiche? Now, my name is Wayne McDonald. I'm the Chief Currency Coach of FXBootcamp.com. I'm also licensed and registered by the National Futures Association as a commodities trading advisor. That's a fancy way to say that the regulatory agencies in the United States have deemed me an expert, and I am legally able to advise professional traders such as hedge funds. My company is FXBootcamp.com. Very briefly, we provide live training and analysis in real time as the market's moving. We teach you how to trade and how to plan your trades in advance. We teach you how to understand the technicals and fundamentals, intermarket analysis, and psychological aspects of trading. And we don't do it from PowerPoint presentations. We do it while the live market is moving. A lot of the concepts in these presentations are also covered in my book called Strategic and Tactical Forex Trading, and that book is available on Amazon.com and is a big seller in the foreign exchange category. Anyways, let's move into the chart setup. Okay, I want to ensure that you understand what my charts say. First of all, I measure speed of the market by using a 21 and 55 EMA. I measure the momentum of price action by using the 5 and 8 EMA SMA combination. I look at trend, or what I call the fair market value, using a 200 EMA, measure volatility with Bollinger Bands at 2 standard deviations, and for oscillators I slow MACD down by using custom settings at 21.55.8, and this shows me overbought and oversold conditions of the market. And then I speed stochastics up 8.35, and what it measures is overbought and oversold conditions for price action. Together they form a story. So here we can see the 21 is crossed below the 55. Technically speaking, when I see this, the market is falling, so I want to look for opportunities to short. Those opportunities are defined by price action. Remember, I said momentum of price action? Moment. It's derived from the moment. What is price doing right now? Momentum. What is price doing in the moment? So when I see trade opportunities with price action falling, and I can see that the market is falling too, I look for opportunities to short. But look at it this way. Water always finds the path of least resistance, right? That's what I want to be. I want to be a cork in the river of Forex trading. I just, I want to swim out into the middle of the stream and swim downstream, not upstream. I just want to float down the current. I do not want to fight the natural forces, and that's what I'm trying to do. Line up price action with market action, and that's what my chart looks like, with all the moving averages and oscillators together. Looks like a lot of lines, but that's not really what it looks like to me. The first thing I look at is what's market doing. Great, I want to align price with that market direction. and then oscillators help me to look for overbought and oversold conditions. Okay. Now, the last presentation we talked about how to use Fibonacci retracements to get into a trade using it as a leading indicator. Okay, we looked at things like a 382 retracement or a 618 Fibonacci retracement to identify nice little pullbacks to get into a trade. Well, what about exiting a trade? Well, guess what? That's exactly what I want to talk about today. And just like all the other presentations I've done, I'm going to use today's market. I'm not going to go back through the archives, dusting them all off and showing you perfect examples of Fibonacci retracements and extensions. I'm going to show you what happened today. I'm just going to go into today's market and I'm going to show you how to use Fibonacci extensions to look for possible exits. Okay, now here's what you want to write down. Okay, now yesterday we talked about the stuff on the left here. We talked about 382, 50%, and 618 Fibonacci retracements. Well, I also use 786, and that's my Alamo, my last line of defense. Okay, but more common, you're going to see somewhere between a 382 and a 618 Fibonacci retracement. That's the golden zone for Fibonacci retracements and getting into a trade. Well, what do? What should you expect as your profit target if you're in because of a Fibonacci retracement? That is the raison d'etre of today's presentation. Okay, before I just blurt out a bunch of numbers, let's talk about logic so you can understand, because I don't like memorizing things. I want to understand. Okay, here's what I want you to understand. Okay, look over here. Let's talk about a nice big trend. Okay, and then there's a natural pullback. Remember how I defined an uptrend as a series of higher highs and higher lows? Well, a Fibonacci retracement is anticipating a new higher low. You want to get in on the higher low and then go long, right? So eventually it's going to come down and then start rising again. A Fibonacci retracement wants to measure the ratio, right? How far back did it pull back? And now you're anticipating a new higher high, right? That's what it's all about. If an uptrend is a series of higher highs and higher lows and higher highs and higher lows and higher highs and higher lows, well, then you're trying to get in on a higher low and ride it to the next higher high. I'm going to show you right here and right now how to anticipate where the next higher high is. Okay, here's what you need to understand. The farther back it retraces, the less likely it's going to go high. I hope I said that clearly. The farther back it pulls, the farther the pullback, the lower the extension. How about that? Okay, so if we get a nice, well, this is about a 382 Fibonacci extension. Well, it came down hardly anything. Okay, it only came back 38.2%. Therefore, it's going to go up quite high. The reason this happens is there's so many bulls in the market that anytime price pulls back, bulls buy it. It's a buyer's market. Every time there's a little pullback, boom, traders get back in and start buying it up. There's something incredibly bullish about this. I want you to remain incredibly bullish. Okay? Now look over to the right side here. What if you get an uptrend and it comes back like way down here and then turns? Much farther pullback, let's say 618. Well, it's still likely to make a higher high, but maybe not as much. Okay? All right? Maybe not as much. So don't memorize. Just understand that the farther the pullback, the lower the next high is going to be. Why does this happen? Well, if it pulls all the way back and then traders buy it, well, somebody balked. Okay, someone wasn't that eager. They're like, oh, I don't know. Some people thought it was coming down. Okay, especially if it comes all the way back 78.6. I mean, it's almost an 80% retracement. Lots and lots and lots of people are nervous. That's the logic, okay? Here's the numbers. A 382, if price comes up and only comes back 38.2 and then rises again, you can expect it to go very high. And really, sky's the limit here. Most commonly, it's only a 618, but it could go way beyond. It could go 200%. It could go 2618, but sky's the limit. Okay, lots of people are bullish in this market, and you should be bullish in too. Or if it's a falling trend, okay, if the trend's down, it just comes back. It comes up a little bit, 382, and then down again. All right, it can keep falling, falling, falling. At least 618, maybe even farther, maybe 261.8. Very possible, okay? Those are very big moves. It happens a lot, okay? A 50%, it's sort of right in the middle, right? Right in the middle, a 382 to a 618. Somewhere in there. Now a 618 is a farther pullback. So a 618 would, instead of only falling here, it would fall about here and then up. Okay, so we're expecting a higher high, but not as high as a 382 pullback. Okay, a 618 is a 121.4 to 1382. Really what I'm looking for here is a 1382. Okay, but I'm telling you, if it hits 121.4 and wimps out, don't be a tough guy. Take your money and run. What's a big deal? The extra pips aren't that much. Okay, so I know we can talk about the 786. I don't think I have any examples of today because today, wow, everything was moving for a while there. Yesterday was incredible. So we had big moves, but within a big range today. So technically, it was kind of range bound today, but which is so you're not going to get 786s. But let me explain it anyways. Okay, a 786 means you have an uptrend and comes almost all the way back and flips up. Okay, in this case, what I'm worried about is either a double top or just slightly higher than a double top, and then it wimps out. Okay, that's all. It's not much. The trend almost reversed, and anything below 786 is a reversal. Okay. Was that confusing? Was that a lot of details, a lot of numbers, and I'm blurting things out and stuff? Well, I'm going to show you what happened today in the live market, and I'll give you real examples, okay? But here's the simple thing, okay? A 382, I'm expecting it to go to at least 1618, maybe beyond, okay? A 618, I'm expecting it to go to 1382. So really, you don't have to remember that much, okay? Now, do you remember the pullback zone? I said if there's an uptrend, I'm waiting for a pullback somewhere in a pivot or in a Fibonacci zone of 382 to 618. I'm just saying, look, if it skips off the top, it's going to go high. If it comes down and skips off this, it's going to go high, but just not as high. I don't think it's that complicated. I think you get it, okay? So, memorize those, write those down, but let's go to the market. Let's see what happened today, eh? Eh, Brew? Let's go to today. Now, I'm showing you here, this is a 1-minute chart on the Euro-Yen today. Right now, this is live on the FXCM MT4 trading platform. Let's talk about what actually happened today. I have a fib study here, and what I've done already is I've measured this large swing high with this swing low, and I want to show you, nice and simple. It's not perfect here. It's not perfect, but you can see somewhere near the 618, it hits a bottom, and up here near the 1382 is the top. The 1618 is your aha moment that it should go somewhere between 124 and 1382, and it almost hit 1382, but you know, I'm just a hair away. I mean, literally just, what is that, 8 pips or something? So very, very close. That's what you would anticipate if you saw this new higher high, saw some higher lows, and a double bottoms at a 618. That's what you would be thinking. That's what you'd be guessing on a 1-minute chart. Okay, but let's move this around. Let's have some fun. Fibs happen all the time. This is a 1-minute chart. I'm going to show you other time frames. But how about all these other little things? Okay, here's a little fib. There's a high. There's a higher low. It's an uptrend, right? Series of higher highs and higher lows. 618 Fibonacci retracement. What would you expect? A 1382. Look at this. This is the 1382. Okay? 618 to 1382. And look at top, 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 top. Is there any doubt in the world that that was a perfect Fibonacci? It was absolutely, totally perfect. The 618 to a 1382 ratio. How about then you take that swing high and this low? 50% pullback, what would you expect? A 1382. There's your 1382. You see that? Not perfect. It actually touched the 1618 exactly, but most of the hesitation was right at that 1382. Again, a nice, perfect textbook style Fibonacci. So you could be scalping your way on this just using a 1-minute chart. I often do that, especially range bound. Here, let's take the next swing high, swing low. You get again a 618 Fibonacci retracement, and again, look at this, exactly 1382. So what was that? 1, 2, 3, 4 examples on a 1-minute chart today of a 618 to 1382. And you're like, oh, Wayne, that's just lucky. You went out and you found some crazy currency pair on some crazy time frame. Well, you know what? It's a Euro-Yen 1-minute chart. So maybe you don't like that. So do you want to pick? Let's pick a cross. How about Euro-Swissy? Okay, this is a Euro-Swissy 15-minute chart from today. Okay, there's a higher high, right? So and then it starts to fall. Take the swing low. This is your 618. See that exactly? I think only 1 or 2 pips off of a absolutely totally perfect 61.8% Fibonacci retracement. Not 60%, not 62, 61.8, right? So what are you thinking is going to be at the top? 1382. There is the 1382. Once again, now on a Euro Swiss franc 15-minute chart from today. So you enter somewhere in here, and your profit target would be right in there, right around 1382. You're looking for reasons to take profit. How about that? As soon as you saw red, I'm sure you were sweating bullets, and there's a huge bearish engulfing candle. It only happened about 20 minutes ago. Look at that. I'm talking about live stuff. This is totally live. Okay? If I did this presentation a half an hour from now, we'd still be right here, and I'd say, well, I'd be worried. I'd look for reasons to take profit. Okay? This is live, which means when I was doing the PowerPoint presentation, part of this when I was still building the PowerPoints, this hadn't happened yet. I'm telling you, this is live as live can be. Let's take, I don't know, anyone trade pound dollar? Here's pound dollar. Hey, look at that. There's a swing low after a swing high, 618 fib, right? What would you expect the top to be? Well, we hit 618, so you could have gone long. This is a 15-minute chart. Again, this is live, so you could have hit the 618, maybe gone long after 5-8 cross. All right, nice and easy. So if you watch the video on moving averages and you watch the video on Fibonacci retracements, you know exactly what I'm talking about. A 618 Fibonacci retracement, then a 5-8 cross to the upside. Well, you potentially could take the shot. What would your profit target be? What should you have in mind? You're thinking 1382. Okay, look at this though. Look at, this is the 121.4. We ran into that. See, I would like it to go to 1382, and the range you have to be worried about is the 1382. Sorry, the 121.4 to 1382. One is sort of more conservative, the one's sort of more normal. Look at that, it hit the 121.4 and totally wimped out. Does that mean it's over? No, not really, because you can connect all of these and see that we're probably just in a channel. But I'm telling you, it hit the 121.4 and crashed. Maybe you should at least scale out some of your profits, okay? But, you know, it potentially could go even higher than that. Do you want to look for any other fib stuff? Okay, what if you took this swing high right in here and you measured that swing low? Okay, so now it's a Fibonacci, right? Again, it's a 50%, so let's say you went long here. You're thinking 1382. Once again, it turned out to be a 121.4. So whether you're measuring from here to here or for here to here, the same ratio, the same two different Fibonacci studies are telling you that there's a little bit of concern here. It's not much resistance, but price sure reacted to resistance. So I suggest you don't be a tough guy and say, well, you know, Wayne over at FX Bootcamp says it has to go to 1382. You know what? Chill out and relax. It doesn't have to do anything. I'm not in control of the market. You're not in control of the market. I'm telling you, if you get to the Fibonacci extension and price tanks like a, you know, like a ton of bricks with 2 hammers on top, don't sit around and be a tough guy. Scale out at least, or take some profit. Take some money and run. What else do you want to look at? Pound yen. I bet you love pound yen, huh? Boy, this yen can be so strong these days. And the pound has been weak and the yen's been strong. So anyways, this has been a good currency pair. What do you want to measure? We got all kinds of swing highs and swing lows. Depends on what time frame. Again, this is a 15-minute chart today. I mean, just today. You can take a swing high. Oops, let's do it this here. Let's do this one. That's the swing high. There's the swing low. And okay, this is an example, if I measure it this way, of a 786. So what did I say about a 786? I said you're lucky to get it past the 100% mark. Okay, I said you should expect 100% to 121.4, right? That's what I said. Because it pulled back so much, there's lots of people wimping out. So when it makes a double top again, I think a lot of people like to take profit. So this is the 100% line. Let me move it all the way over, all the way over. Oh my gosh, 786 to 100%. Down, double top. Fibonacci retracements told us that you can ride this back up to about a double top area, and when it gets there, everyone else is going to wimp out, so you should probably wimp out too. Take your profit because you were in somewhere here. How about a 786? Go long here. When you get the 5-8 cross, You're in at 142, what is that, 142 even, 142.30, and you're out here at 146. This is today, guys. This is today. Hundreds of pips. This is just a pound yen trade. Nice. I mean, this is what, the 10th example now? Let's move this and measure something else if I can. Let me there we go. Let's take this one, this swing high. Let's say you're trading just a different time frame, right? Let's take that swing high right here with this swing low. Now the bottom is a 50%, right? You see this? 50%. So what's your target? What's your profit target if you have a 50% pullback? 1382. 1382. By the way, I just noticed it's Friday, so the market just closed. So this is it's live charts, but the market is now closed. So anyways, yeah, 50% pullback. What are you thinking? 1382, aren't you? 1382 is right here. So how close did we get is the question. See that? You're thinking somewhere in here based on Fibonacci, you want to take profit right here at 1382. And guess what happened? It hit 1382 and tanked. So I showed you what? The pound yen, pound dollar, euro Swissy, showed you 1-minute charts, showed you 15-minute charts, or sort of the bigger swing trades, the spot trades, I showed you scalp trades, all using Fibonacci retracements and extensions together as leading indicators to understand when to get in a pullback and when to take profit. And it's when you add it to your repertoire, whether you're using it a 1-minute chart, or 1-week chart, 1-month chart, it's a valid part of your trading, and I hope you make it yours. Remember, practice this methodology on a demo account. So once again, my name is Wayne McDonald. I'm the Chief Currency Coach of FXBootcamp.com, and this has been a presentation for the Daily FX audience. How to improve the timing of your trades using Fibonacci extensions. I hope you liked it. Cheers.